today is set up a hypothetical trade using EA. Okay. EA was on our option report. I spent a half an hour in the lounge this morning. And by the way, those of you who are in the traders lounge this morning, really enjoyed that. Glad I could come in and sub in for Coach Mark. And I know, Noah, you do a lot of those lounges on Tuesdays and Thursdays as well. Yeah. It's just a fun environment to be able to teach our students in, right?
Yeah, it's kind of fun. It's just kind of an open forum topic of the day. You know, we move around a little bit. Plus, we get to see what you're trading. I think that's the most fun part about it, is getting to see what each of you, the students, are doing when you volunteer, and to see what kind of trade you're setting up and what kinds of questions you're running into, and it's just cool to see the progress. So it's pretty neat.
And we've got 5 minutes here. I want to do a rapid fire through this. I'm going to give you the numbers, Noah, and we can agree or disagree on these numbers, but I already set this one up. Okay.
Okay.
All right. Trigger entry 100.76. Now, what I did at that time, and you might have a new trigger entry at this point, but I took 10% of the ATR above the high of the current candle. Now, where are we at right now? 186?
It is last traded price is, open, high, low, close, 161.
Okay. So, and you could trigger a little higher than that, but above this little zone here, this little compression, you can go up to 101.25. You could find a different decimal point. I had two targets, 107.5 and 115 based on pay. And we had a discussion about how you decide between the two targets. And then I had a stop loss point at 97.4 based on the intraday support point that I found over the last 6 candles. And we kind of built a trading plan off of that. Now, my question here is not, is that a good trade? Because just a hypothetical trade we built in Lounge. I like the setup, right? Obviously, there's a reason why we're looking at it. But how do you decide when to go long stock versus long call versus bull call? And let's keep this high level for just a few minutes. Noah, let's start with you.
Well, one, those are good numbers, and I think the trade numbers work. You got decent reward to risk ratios. I think a lot of folks, as they learn to trade, and especially as they learn to trade options, tend to move away from stock just because the leverage is exciting with options and things of that nature. But it's a really simple, clean instrument. What you see is what you get. You don't have to worry about volatility. It's simple entry and exit. I think it comes down to capital allocation. Do you have the capital free to own the stock? Does it make sense as far as your portfolio design goes to own the stock? Do you have longer term aspirations? For a swing trade, not too bad to get in and out. You could possibly accomplish, similar reward to risk scenarios using options if you wanted to trade a directional long call. Volatility is usually something I look at, and we're several weeks before earnings right now, so I would assume implied volatility is reasonable. Mm-hmm. So you could buy options knowing you're not paying an inflated premium. And then some of it comes down to preference. Just straight up, this is the strategy I like to do. And if the numbers work out, it has to come back down to the numbers plan. If you don't have a numbers plan, you need one as far as reward to risk ratio goes and what the probabilities of the outcome are. And so, with a simple stock setup like that, that's easy. Anybody can do that. That's not rocket science to put in an entry and an exit and have a target, the profit target that's far greater than your risk. Mm-hmm. So those things make sense. No problem.
Cody, what about you?
After that, completely agree with Noah. I would also add the fact of knowing the personality of the stock. And I know sometimes, it's not easy to do if you just see a technical setup and you don't necessarily know the stock or the company very well. EA, I can tell you because I've made multiple trades on EA, is that this thing will actually set up and then hang out for a bit and not do anything. And you'll see it popped up, made a high base, popped up, bull retracement, kind of hung out for a bit. It's like this particular stock doesn't move in that sharp type pattern that you see with some other stocks. So from that, I would look at, okay, do I want to just do a long call here where I might get, theta decay working against me? Okay. Do I want to just do a long stock? And I'll kind of base what strategy I'm using off of the actual stock's personality.
Mm-hmm. All of them are viable. I was talking to a student yesterday, and I think there's a lack of understanding, though, as to why we use long option. And what she was telling me, and she's a great trader, great person. She's learning. She's doing great. Her energy is great. She's saying, well, I like long calls because I save the money. And I'm like, well, yeah, but then you bring down your theta, you're reducing your overall net positive theta, you're taking on time decay, and you actually have all kinds of cash you could have just bought the stock with. There are traders that have to go into options, right? When I started with a small account, Noah, I had to go into options first, and I still use options. I use options for all kinds of different purposes. But to use the long call just because every time is not necessarily accurate. And I think about two mentors that I've had over the years, and one, and you know him, Troy. Troy just does long stock to this day.
Mm-hmm.
He prefers the simplicity of it. And then, but yet, like somebody like Micah is going to go into like three-legged, butterflied, ratioed spreads, right? Because he likes the complexity of it. It reminds me of something Van Tharp talks about all the time. You don't trade the market, you trade your belief about the market. Some people trade a strategy because they think it fits, what their design of what they want to accomplish is. But I have a challenge for everybody out there. If you don't know why you're choosing the strategy you're choosing, you probably need to do more work into that field. And if you've never tested the difference between what long call and long stock and bull call spread do in terms of your portfolio design, you need to talk to a coach or a mentor. There's no question about it. Using long directional leveraged options just because you don't want to put the cash out for stock is not a logical reason alone. It could be logic in the reason, but it's not the only thing to think about. And I really believe this, Noah. If you can't button hook a very simple buy the stock, sell the stock trade, you're not ready for options yet, in my opinion. But there's a process, and I want everybody in the chat to type this in the chat. Trust the process. Wherever you are in your evolution as a trader, there's always something you should be working on right now. Cody, tomorrow we can absolutely pick this up and talk more about theta and how those option Greeks work in the Analyze tab for sure. Yep.